Hello guys and welcome to my channel today. In today's video I'm going to be showing you one of the strategies I discovered recently, and I've been using it to scalp the boom and crash market for up to 5 to 10 candles, sometimes up to 20 candlesticks on the 1 minute time frame. This is a very simple but effective strategy. It works very fine, guys. So I wouldn't want to waste your time in this video. This strategy particularly uses indicators, not price action. If you would want to study the price action strategy, you can visit the last video I posted before this one. In that one, you will learn how to use price action to catch spikes and also scalp the market as much as you want. All right, so but in this one we are going to use indicators. This one is based on indicators. Now I have about 4 indicators on this chart, on my screen. We have 2 on the main chart and two also on the indicator window 1. So on the main chart we have the Bollinger Bands. They are in black color, and we also have the moving average, which is in blue color. I think the blue color doesn't show well. Maybe if I zoom in you'll see it clearly, or I may have to change that color. Then we also have in the indicator window, we have the Stochastic Oscillator and the MACD, that is moving average convergence divergence. All right, so I will show you the settings before the end of the video. All right, so how does this work? Meanwhile, let me just change the color of this moving average on the main chart. One moment, please. Where is it? Moving average. Let me look for a color that is okay. I think this is better. All right, so now how does this strategy works? This is how it works. First of all, you need to wait for a crossing between the moving average, which is on the main, on the main chart. This is the moving average. The moving average is this gold colored line running here, indicator running here. There has to be a crossover between the indicator and the Bollinger Bands. There has to be a crossover. Once you notice the crossover, then you check you go to your indicator window 1 and also check to see this line going into the level 80. This is your MACD line. This is your MACD line. It has to be MACD signal line. It has to be below 80 mark, below the 80, sorry, below the 20 level. Once it is below the 20 level and you notice this crossover here, you have to go in for a trade. Now, and as you can see, this one in particular didn't go well. Immediately after maybe 1 or 2 candlesticks, there was a crash. The market crashed down here. See where the price got to. And if you had entered the market at this point, you will lose some money, because if you look at these candlesticks, they are small. Meaning from here to here may cover up to 10 to 15 candlesticks. That's some good money, depending on lot size anyway. All right, so I will tell you why before the end of the video. I'm going to disclose why this one happened so, and how you can avoid this kind of a situation. I mean, well, let's just keep on backtesting. Mind you, this is crash 1000 we are now, so let's just keep backtesting. All right, guys, see the setup. One moment, please. I have to drag this thing up. All right, so if you look at here, you can see that there was a crossover here. The gold colored moving average crossed the MACD at this, crossed the Bollinger Bands at this point, and also there was a cross here. Sorry, I mean the MACD signal line got to the 80 level here, 20 level, and you can see how much it bought. Crash bought up to this. In fact, it was much. So you can grab up to 20 candlesticks, but the personal level wouldn't want to be greedy, because the market can do anything at any time. So it is best to take maybe 5 to 10 candlesticks, then you leave the market. and you wait, the opportunities will always come. You always have that opportunities as long as you are on the 1 minute time frame. You can have up to 20 opportunities in a day. And besides, you're not just going to trade on crash 1000 alone. You also trade boom 1000. It works on boom 1000 also. I just tested on those two. I've used it on those two markets and it works well. All right, so let's keep on back testing. Let's keep on back testing. All right, see another opportunity here. There's another opportunity. There's another opportunity here, guys. There's another opportunity here. You just enter the trade immediately. Immediately this gold colored line crosses over the Bollinger Bands, and this other line here, the signal line of the MACD, crosses the 20 level. You enter your trade and you catch 10 to 20 candlesticks and you're out of the market. 5 to 10 candlesticks, you're out of the market. You don't need to be greedy, guys. You don't need to be greedy so you won't lose money. Then let's check another opportunity. Look, another opportunity here. There's another opportunity here. You enter your trade and you get your number of candlesticks. You're out of the market. Guys, this thing is really working. It works. It works. Before the end of the video, I'm going to show you why you would lose money with this strategy, because every strategy has rules. Then the ability to minimize the losses is if we are careful with the rules and apply them accordingly. So now look at this. Look at the setup here again. Look at another setup right here. A few candlesticks and you're out. 5 to 10. You don't need to be greedy. Look at it here, guys. Look at it here. It's really working. All right, so imagine you were the one trading this, or you were online or you were on the chart and found this with this strategy. You find these opportunities today. You would have made some good money. Mind you, this is just a few. How many hours have we moved in the backtesting? I can't really say. I think about 5 or so. But before the end of the day, you might have more than 10 to 15 opportunities to trade on only a single market. All right, now let's go to boom 1000 and also try to see if we can find opportunities. All right, so on boom 1000, since it is boom, we'll be buying boom and selling. We'll be selling boom just as we bought crash. So we'll be selling boom. Now you wait for the crossover here, the moving average, which is in gold color, to cross this Bollinger Bands, and you also wait, confirm that the MACD signal line has crossed the 80 level. Then you place your trade. 5 to 10 candlesticks and you are out of the market. That is it. Just make sure that this line is always here. This MACD line, signal line, is always at the or above the 80 level. It has to touch or cross, but not below. That is the rule. No matter how the chart may look, if you do not have this MACD signal line here, no matter how it looks as if it's going to give you a result, don't try it. Don't try it. Just to avoid losses, guys. Let's look for another opportunity where the MACD signal line touches. And here, look at it here. The MACD signal line also touches this, touches or crosses the 80 level. See this, and you see how many candlesticks you can get up to 20, or we say 5 to 10, and you're out of the market, guys. Let's keep on back testing. Let's keep on back testing. See another opportunity here. Now in this one, look at what is happening here. Look at here. Now this one crossed here, but now you would say, it didn't give you complete 10 candlesticks and there were spikes. If you look at it closely, you will discover that even no matter the spikes that came up, the market still reversed. As long as this MACD signal line is above the 80 level, then before you enter the market, you must always have an opportunity to get back. You hardly get some have losses, guys, if you follow the rules. Just follow the rules. That is it, guys. So if we continue backtesting, you will see a lot of opportunities. Look at an opportunity here. Let me get that arrow. Where's that arrow? Come on, guys, see it here. Guys, you make money. 5 to 10 candlesticks, you are out. 5 to 10 candlesticks, you are out of the market, guys. 5 to 10 candlesticks, you are out of the market, guys. Look at it here. So you don't have any problem with that. You see, just 5 to 10 candlesticks. Don't be greedy. If you are greedy, you will lose all your money. Guys, see this one here. 5 to 10 candlesticks, and the market is the MACD signal line is here. So guys, this already really works. So I've not tested it on boom 500 and crash 500, or boom 300 or crash 300 yet, but these are the two markets I've tried and I have used, and I've made some good money. I implore you guys to backtest it first on your demo account. The more you practice this on your demo account, the more you understand how it works. Because no matter what I teach you here, I cannot teach you everything. There are things I might just skip, not personally, but not deliberately, but it's a normal thing. Teachers can never teach everything. There are things you will discover while practicing. So I implore you to practice first. Don't go to trade with your live money. Immediately you see this strategy, just go and practice with your demo account, on your demo account first. Study it and get used to the strategy. Then be sure you are profitable before start making money. But I assure you make money. You make money with this strategy, guys. Now I mentioned that there was a reason why this happened here on crash 1000, and let me show you guys something. Hold on please. Okay, so now the reason this would happen, the reason this will actually happen is if you do not confirm the market's trend, the trend of the market before going to place these trades. That is it. Because it is said that the trend is your friend. If you follow the trend and enter your trade, you wouldn't have any problem. Now this is crash 1000, and by default crash 1000 buys. All crash pairs they buy. Then at some point they crash. So when crash is buying, when crash is on a bullish trend, that is when you buy. You use this strategy to buy. In fact, any strategy, you must always buy when the market is bullish and sell when the market is bearish. So you must always try to confirm the market trend, the trend of the market, before going into place your trade, so they won't lose money. Like now, it is clearly shown that the market was in a bearish. The market was bearish when this setup came up, and whoever took trade at this point would lose money at that time. Would lose money here, So how do you check your trend? First of all, since we are trading on the 1 minute time frame, I would suggest you use perhaps the 30-minute time frame to see the trend. On the 30-minute time frame, you discover that the market is bearish. Look at when it happened. When that stuff happened is here. Hold on, let me just go back to the 1 minute time frame. I want to see if I can trace something out. Where is my... I want to show you guys something. Please be patient. Okay. All right, so 30 minutes. Guys, look at on the 30 minutes time frame. This is where the trade happened. This is where that setup happened. You can see this is a long bearish candlestick. The market was bearish at this time, and look at where it happened. Look at this. This is the spot it happened. So it is very, very not possible to make money using this trade, buying crash at this time while the market is bearish. So, but if you were fortunate to be in the market while these 30-minute candlesticks were bullish, you can see, then there's a high chance of winning a lot of trades. Once you spot the setup, you make some money. So if your setup fell under this during the formation of this candlestick, during this time frame, this time, you lose money. The chance of losing money is very, very high. So you must always confirm the trend. You can go to the 30-minute time frame to check. You can go to the 15-minute time frame to check. But I would prefer you use even on the 15-minute time frame, look at that spot here. It was bearish. So there was no way you could easily make money on that using that buying crash at that time. I don't know if you understand my explanation, guys. To check the trend, you go to the maybe 15-minute or 30-minute time frame and see what you have there. If the majority of the candlesticks you're having are bearish candlesticks, you leave the market at that time. Just ignore the setup. No matter how good they look, ignore the setup. Wait until you see more of these green candles. Then if the setup appears when you see the dominance of these green candlesticks, then you buy crash. The same thing is applicable to boom 1000. If you notice that what you have is more of the green candles, meaning the market is the boom 1000 is bullish at that time, you step out of the market and wait for where you see more of the red candlesticks, meaning at that point crash boom is selling. When boom is selling, you have few bullish candlesticks. You have very few spikes, and even the little spikes you will have, the spikes you'll be having, if at all you have, will be very short ones. They will not be long. That is why you noticed while we were backtesting, you discovered you may have seen some opportunities where after entering the trade within a few minutes the market spiked, but even when it spiked, it still retraced back and put your trade in profit. That is because you are following the trend. So guys, that is it. We have to apply this and make good money. I wouldn't want any of you to lose money. Always look out for the trend before trying to place your trades. The trend is your friend. Guys, I need to practice this, make some good money, and don't forget to subscribe if you've not done that yet. Share this video, like it, and keep on checking for better and new videos. Guys, see you in the next video. Peace out.